Apple recently announced that they will be doing a 4-for-1 stock split after their most recent earnings report. Now, in this video, we'll take a look at what that means and what are the consequences of a stock split and whether this is an opportunity to buy the stock. What does a stock split actually mean? In this case, we have a 4-to-1 split. This means that if you own one Apple stock before the split, say at $400, you'll get 4 shares, each worth $100 after the split. Now, you still own the same amount in terms of total value, but you're getting more in terms of number of shares. This will be the 5th time that Apple have done a stock split. So they first had a 2-for-1 stock split back in 1987, and another 2-for-1 split in the year 2000, and another 2-for-1 split in 2005, and the one before the current, a 7-for-1 stock split back in 2014. Now, what are the consequences of a stock split? Stock splits does not change anything fundamentally about the company, apart from lowering the stock price, which may make it more appealing for the retail investors. Back in 2014, the Apple stock was trading at above $600, and the 7-for-1 stock split lowered the price per share to under $100. These days, most stockbrokers already offer fractional shares trading, so people are already able to purchase a fraction of a stock, so stock splits shouldn't really have a huge effect on the stock price. However, stock splits are generally considered as a positive for the stock because it generates news and gives the illusion that an expensive stock is on a discount, and more investors might be interested in purchasing a stock when they see it trading at a lower price. In addition to the news of the stock split, Apple also had an extremely good third quarter's earnings report, with its sales overall up 11%, despite the health crisis going on. Its earnings per share were at $2.58 versus $2.04 by the analyst, and its revenue was at $59 billion as opposed to $52 million by the analyst. Its iPhone revenue also increased, and also its services revenue. iPad sales were up by 31%, and also the other products such as AirPods and Apple Watch have also seen its sale grown by 16% compared to the same quarter back in 2019. Now, this might be boosted from the working from home trend, and also the fact that many of their products can be used from home. If you already own Apple stock, it's definitely worth holding onto them for the long term. And if you are a long-term investor, Apple is also an extremely good option, since not only have they been consistently producing good earnings and revenue, they are one of the minority of companies that continue their share buyback program. Apple is expected to add up to $100 billion in buybacks despite the disruptions to the economy with the current health crisis going on. In fact, for their most recent buyback on 30th of June, Apple bought back around $15 billion worth of stocks. Now, personally, I am not a fan of stock buybacks because they inflate stock prices without contributing to the fundamentals of a company. But that's for a whole different discussion in itself. However, stock buybacks do increase the stock price for the shareholders, and Apple on average have spent around $13 billion on share buybacks per quarter over the past 5 years. At this stage, Apple stock is extremely overbought from all the news surrounding the stock split and the earnings report, and I will look for a slight pullback if you are interested in purchasing the stock. If you want to purchase the stock for the purpose of the stock split, you have to purchase it before the 24th of August, and trading will begin on a split-adjusted basis from the 30th of August. Let me know your thoughts about stock splits and stock buybacks, and I hope these information have been useful for you, and I will see you in the next video.